headlines, the more it feels like the world is entering a completely different era. So first, we have to talk about oil prices. So oil prices are climbing back again after fresh US strikes inside Iran renewed fears across the Strait of Hormuz. And that is one of the most important oil shipping routes on Earth. So about 20% of global oil supply flows through this very tiny, narrow waterway. And now central banks are starting to worry that inflation, so energy inflation, could stay elevated for much longer than markets expected. We'll break down why the Fed might be trapped despite Kevin Walsh is coming in to take control, why Asia, specifically speaking, is so vulnerable, and why this could become a major problem for global market, for interest rates, and also risk on assets like Bitcoin. And I'll give you my personal take on Donald Trump's strategy right now, because publicly, usually he say one thing, but behind the scenes, I think something much bigger might be brewing, might be happening behind the scene. Then later in the show, the former head of CIA is warning that the future of warfare might be autonomous drone swarms controlled by AI. So not tanks anymore, definitely not fighter jets, but thousands of drones operating together like a hive mind. Honestly, like some of the things that he's described sound straight from some sci-fi movie, except it's actually happening. So we'll break down why Ukraine has become the testing ground for future AI warfare, why drone economics are changing military strategy completely, and why defense companies might be entering one of the biggest spending cycles in decades. Meanwhile, we have to talk about Samsung. So Samsung workers are about to receive some really large bonus the tech industry has ever seen. So some employees could reportedly receive payouts worth more than 400K per person. And the reason is quite simple, is because it has something to do with the AI chip. So today, we'll explain why semiconductor workers are suddenly becoming some of the most valuable employees on Earth, and why the AI boom is no longer just about software story, it's now a physical infrastructure arms race. We'll also talk about a massive shift happening in global finance. So because Hong Kong has officially overtaken Switzerland as the world's largest cross-border wealth hub, that is a huge symbolic moment. For decades, like Switzerland represent old money, like banking secrecy and wealth protection. Now, global capital is increasingly moving towards the east, so towards Hong Kong or towards Singapore or Asia. We'll break down what it means for the future of global finance and whether we are slowly watching the center of financial gravity shift away from the West. And of course, we've got major Bitcoin and crypto stories today as well. So Kathy Wood is back with another huge Bitcoin prediction. So saying Bitcoin could potentially reach between 750,000 a coin to $1.25 million a coin within the next 5 years. We'll break down why institution adoptions is becoming the key narrative and why Wall Street's relationship with Bitcoin has completely changed. At the same time, MasterCard just secured a New York bit license, being one of the toughest crypto approvals in the United States. And Europe's banks are also quietly moving deeper into Bitcoin custody and digital assets. So today we'll explore something really important here. Is crypto replacing the banking system, or is the banking system slowly absorbing crypto infrastructure into itself? Because stablecoins or tokenization and blockchain payments are now moving straight into mainstream finance. And honestly, for this show, like if you put all the stories together, there's one theme that keeps appearing over and over again, which is like the systems are changing. Like everything feels like it's being rebuilt in real time, and Bitcoin sits right at the center of all these shifts. So without further ado, there is so much to break down today. Make sure to hit the like button if you haven't already. If you're new, make sure you subscribe on YouTube and make sure to give us a follow on X. So let's get straight into the first story of today. So we have to talk about oil prices because it is rising again and it's definitely affecting everyone globally on a global scale. And markets are getting nervous that one of the most important energy choke points of being the Strait of Hormuz yet again could face even more disruption. What happened? Because overnight, fresh US strikes inside Iran renew the fears that this conflict is far from over. So what happened is that according to reports, American forces launched new strikes targeting an Iranian military site believed to threaten US troops and commercial shipping near the Strait of Hormuz. At the same time, US forces reportedly intercepted and shot down several Iranian drones that immediately pushed oil prices higher. So if we quickly hop onto Brent crude oil, it's trading well above $96 and right now actually above $97 per barrel. And same for the US crude oil, so WTI crude, it moved above $90 and right now is above $92 per barrel. Now, remember, before the Iran conflict escalated earlier this year, so here we have the past 1 year performance. You see the crude oil is, it's hovering around $60 and right now sitting at $92. So for Brent crude oil, so we do a fair comparison. So 1 year past performance, we were just hovering around around $60 as well. So definitely energy prices are still dramatically higher compared to before the war. And for viewers out there, the Strait of Hormuz, again, it's the most important oil shipping route on Earth. And roughly, this very narrow waterway, it controls 20% of global oil supply. So every single day, 20% of the oil supply moves through this really narrow waterway. So anytime there are military threats near the Strait of Hormuz, markets would, of course, panic because if shipping gets disrupted, oil supply tightens very quickly. And when oil spikes, inflation usually follows. And central banks are so wary yet again. And that's exactly why central banks are watching. So if we go to what basically the president of Federal Reserve Bank of Chicago said, so Austin Goolsbee, he warned that energy inflation is lasting much longer than expected. He said Asian economies in particular are facing what he called an old-style stagflation shock. So that means very slow growth combined with rising prices, which is one of the worst combinations for an economy, especially for countries that import large amounts of energy. And this is very vulnerable for Asia, particularly speaking. Countries like Japan, South Korea, India, and many Southeast Asian countries, Southeast Asian economies depend heavily on imported oil and gas. So when energy prices rise, their costs would rise very quickly. So that would affect electricity, transportation, manufacturing, food prices. So everything becomes so expensive. So that's why Goolsbee said this looks like a classic stagflation problem. And now here's where it comes the big problem for the Fed. Because it is very important for the market. Literally just 3 months ago, many investors expected central banks to cut interest rates aggressively throughout 2026. But rising oil prices are making that so much harder because if energy keeps pushing inflation higher, the Federal Reserve may need to keep rates elevated for longer. And that is bad news for risk on assets, also bad news for Bitcoin. Markets are kind of caught in a middle caught between two stories. It's actually a very interesting time right now. Like market are stuck between two competing narratives. Like on one side, there are hopes that the US and Iran would eventually come to some sort of agreement. Some banks like Citi said investors are slowly pricing out the absolute worst case scenario. But on the other side, like every new military strike reminds markets how fragile the situation still is. And as long as the uncertainty remains, oil prices would stay elevated for a little bit longer. But perhaps more important to do here is to kind of read what Donald Trump is doing. That's why like some people like to call it the Trump analysis, try to guess ultimate goal of Donald Trump. Because like before he pulled this move on Iran, I'm sure he knows that oil prices would spike. It almost feels like he is trying to achieve something because before his term come to an end, and that is for sure is going to be his last term because like this is his second term to be the president. So feels like there's so much he wants to achieve before the next president. There's definitely some roadmap on his mind. And studying Donald Trump on a daily basis here on Roxham TV, usually when he says something publicly, it is more like a distraction for what he plans ultimately in the background. So when he say he's gonna strike someone, maybe he's actually planning to do the other thing, or maybe, I don't know, buy Iceland or something, or actually Greenland. Rather, so maybe buy Greenland, just an example. But like this is ultimately his style that from what I've witnessed over the past few months and doing daily analysis on him. And we know Kevin Walsh is taking the Fed chair in June, so which means very soon. So like Donald Trump publicly made comment about Jerome Powell being too late Jerome Powell, but like ultimately since the energy prices is going up, interest rates have to stay elevated, like otherwise inflation gonna come scoop back in. So like in other words speaking, like the whole Federal Reserve, like of course the Fed chair has more power compared to the members, but it's still a more a voting mechanism. So the total 12 Fed members do have to vote for certain decision, whether to hike rate or lower rate. So it's not just like Kevin Walsh be the chair and then he could just like trim rates and cut rates aggressively. And of course, Donald Trump know that, yet he's still doing. So yeah, all we could do for public is to try to guess what he would do, but ultimately, like I'm sure Donald Trump already expected this would happen, yet he still managed to pull it. So maybe he saw more pros than cons for certain strategies, certain moves. We're just like trying to make smart guesses at the end of the day. And as an investor, try to make the most out of it when it comes to investing and choosing the profitable companies. So that is at least the strategy I'm doing right now. And speaking of investing, like there are like some other news. So the second news I have to cover, and this one it actually, I will talk about some defense companies that might worth looking into. Some stocks are quite interesting, and some people are making a lot of basically a good chunk of money from investing into defense companies, and maybe that is a smarter move for us investors to basically fully benefit from the Donald Trump presidential term. All right, so the second story I have to cover is basically we have the former head of the CIA just gave a warning that sounds like some science fiction. So he says the next great threat is warfare. In warfare, it's not tanks, not fighter jets, not even missiles, but it's like drone swarms, like huge group of autonomous drones working together like a hive map. So what happened is that there's this conference. So the former CIA He was speaking at the UPS Asian Investment Conference. So he warned that unmanned systems will become one of the biggest military dangers of the next decade. He pointed to conflicts in Iran, in Ukraine, and the Middle East as proof that warfare is rapidly changing. And his warning was quite simple, which is the current defense are simply not good enough. So drones are changing warfare. Like now, we've already seen drones becoming a major part of modern war, like very cheap Iran. So very cheap around drones, Ukrainian FPV drones, autonomous attack systems, like they're changing battlefields in real time. And here's the scary part, like many of these drones are extremely cheap compared to the missiles used to stop them. Like some estimates place Iran, so here we have the Iranian drone here, and for a Iranian drone, it costs only $20,000 to $50,000 each. Meanwhile, the air defense missiles used to intercept them can cost millions of dollars, and that creates a very dangerous imbalance. And the next step is even scarier. So what he goes on to talk about, like he even says the future is not just some single drones, it's autonomous swarms, meaning hundreds or even thousands of drones communicating with each other in real time, like overwhelming defenses through sheer numbers. And unlike current drones, future systems might not even need human pilots, and that is a major shift. And he goes on saying, like, warfare is moving toward what he called autonomous systems of autonomous systems. So that means autonomous sensors feeding information into autonomous command systems, which then direct autonomous weapons, all with little to no human input whatsoever. Honestly, that sounds like the beginning of AI warfare. And a interesting test lab right now is actually Ukraine. So Ukraine is the world's biggest test case for future warfare. Ukraine has become extremely advanced at producing and using drones. Like they are even using pickup trucks with machine guns linked to targeting computers to shoot down incoming drones, whether it's electronic warfare, interceptor drones, AI targeting systems. Like a lot of future military technology is already being tested there right now. And this is not just theoretical anymore. Like he used some real examples. So he even relatively modest drone attacks have already caused some real economic damage. Here, what we've got is the Qatar one. So the Qatar disruption to its LNG production. That matters because energy infrastructure is extremely vulnerable to drone attacks. So think about it like the energy structure. There are oil facilities, there are pipelines, the shipping routes, all can potentially be targeted very cheaply with drones, with unmanned systems. Now, so I do want to stop for a second because this is still a finance channel at the end of the day. So my next question is that as an investor ourselves, what can we do to utilize this information? Like we're just like daily citizens at the end of the day. So from an investor perspective, what he went on saying is that it will definitely create enormous spending across the defense industry. Like his view is that unmanned systems and defenses against them like could be one of the biggest long-term growth sectors in global defense, because every country is now realizing they need protection against drone swarms. And right now, they might not even be fully reliable solution just yet. So he mentioned this during the conference, and all I could think of is that, okay, I have this information. We know the world is getting more unstable, but what can I do to protect myself? What can I do to protect my own wealth? We know like world is basically going down, or there's definitely more uncertainty. So of course, not financial advice, but when it comes to the defense stocks, like maybe it will surprise a lot of viewers out there, like some of the biggest defense stocks out there is doing really well. So like if we zoom all the way out, like zoom all the way out to maximum. So for example, so Lockheed, so LMT, it rose basically 1,800% all time. So we are not all time high, but like even for the past year performance, it's still doing really well. So past year performance is 13%. How about year to date, right? So like year to date is 6.8%, still not bad. So like for those of you who have never heard of LMD, like basically it's the world's largest defense contractor. The company is heavily anchored in missile defense system and is aggressively expanding into hypersonic technology and counter-drone autonomous systems. So that's why this is, when it comes to defense stock investing, this is the almost like a blue chip. And the second one we could look at is RTX. So RTX, again, if we assume all the way out, is insane profit. From 1986, so it rose 1,000%. But like I wasn't born back in the day, so like if we do somewhat like a more recent, like past 6 months, okay, past 6 months is not much, so 0.9%. Past month is not much as well, but it's still considered a blue chip because what this company does is a diversify aerospace and defense giant. It is the world leader in missile defense, radar, and sensor technology. So there are basically why, again, not financial advice, but there are examples of like how investors are benefiting from what the governments around the world, what countries are doing right now. Because like when it comes to the macro geopolitics, like us citizens, there is little we could do. There's almost nothing we could do. But like we know that this is happening. We know the world is getting more uncertain. The least we could do is to protect ourselves and protect our own world as well. Like I personally, I don't buy like defense stocks like for the moment being like being fully transparent here. I don't like purchase a single stock like this when it comes to the defense portfolio, but like these two stocks are this one for sure, this one I have to double check, but like they are in S&P 500. So in other words speaking, if you are if you hold S&P 500 in your portfolio, you have indirect exposure to these like defense stocks as well. So yeah, I would say like ultimate goal, like S&P 500 is still like a no-brainer. So just what I'm doing is DCA. At least I can get some sleep at night. So like going back to what he said during the conference. So the moment weapons can coordinate autonomously at scale, warfare changes fundamentally. So the scary part is technology usually moves faster than regulation. And there is a very high probability that the future battlefield might be dominated by autonomous systems fighting autonomous systems. So we are talking about drone swarms, AI targeting, machine speed warfare, and the world might be much closer to the future than most people realize. All right, so let me know what your preparation for this, like after learning this information, are you changing your strategy towards your investment? So let's have a discussion in the comment section below. But we're going to take a short break from here. When we come back, we're going to dive our toes into AI. And this time we have to talk about an AI giant being Samsung. You remember we covered the Samsung strike just last week here on Roxham TV. Right now, we have some sort of agreement finally, and Samsung workers, some of them, they are getting a really big bonus. We're talking about 6 figures bonus, and that is definitely life-changing for a lot of people. So we're going to take a short break from here, and when we come back, we're going to give you the information. So do you stay with us after the break?
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxham. One currency, one place.
All right, guys, welcome back to Roxham TV, and thanks for sticking around with us after the break. We're now looking at some good news circulating in AI, and particularly speaking, some AI workers at Samsung, they are getting some really generous bonus. And well, we're talking about payouts worth roughly 400,000 US dollars for some employees. So yes, like per employee. So that's how insane the whole thing is. And the reason why they're getting such a big check is, of course, AI. So like what happened is that Samsung electronic workers have officially approved a massive new pay deal tied directly to profits from the company's AI chip business. So around 74% union members voted in favor of the agreement, ending a very bitter 5-month labor fight that nearly triggered a massive strike involving close to 48,000 workers. And that strike could have disrupted production at one of the most important semiconductor companies on earth, so being Samsung. Remember, like Samsung is the world's largest memory chip maker. And right now, memory chips are at the center of AI boom. And under the agreement, Samsung will allocate 10% of semiconductor operating profit toward employee bonuses. And because AI chip profits have exploded, some workers in Samsung's memory chip division are expected to receive payouts worth around 400, so actually more than 400, so $416,000. That's life-changing money for many employees, like especially for engineers and workers directly connected to AI infrastructure. So like AI is driving all of this, like it all comes back to AI servers and data centers. Companies building AI systems like OpenAI and Microsoft, Google, Meta, and others need huge amounts of advanced memory chips, and especially something called high bandwidth memory or HBM chips. And these chips help AI systems process massive amounts of data very quickly, and demand has absolutely exploded. That's why Samsung or SK Hynix or Micron have all seen huge profit growth tied to AI demand. And there's almost like AI gold rush. Like in many ways, AI chips have become the new oil of the tech world. Like everybody wants them. And there still aren't enough to fully meet demand. And that's creating enormous profits for semiconductor companies. And now some workers as well. But not everyone is happy. Like this is where it gets complicated. Not all Samsung workers would get a giant payout of $416,000. Like employees working in less profitable divisions, so like smartphones, like home appliances or logic chips, are expected to receive very much smaller bonuses, and that's creating tension inside the company. Some workers are already complaining about unfair treatment. There are even reports of possible legal challenges from other unions and shareholder groups, because suddenly one group inside Samsung is becoming dramatically more valuable than the others. But honestly, this is so much bigger than just Samsung. Like this is about what AI is doing to the labor market itself. The people closest to AI infrastructure, so being chip engineers, being AI researchers, data center specialists, are suddenly becoming some of the most valuable workers in the global economy. And companies are willing to pay a huge amount just to keep them inside the company. And for years, software engineers were the stars of tech. But right now, semiconductor engineers are becoming the new power players, because without chips, there is no AI revolution. There's no ChatGPT. There will be no AI servers, no advanced models, nothing. And that's why countries are fighting over chip supply chains. And that's why NVIDIA became one of the most valuable companies. And that's why Samsung workers are suddenly getting 6 figures bonus checks. So we know the AI boom is no longer just about software. It's very much about physical infrastructure. So real factories, real chips, real energy, and the people building that infrastructure are becoming incredibly valuable. Like Samsung workers just became one of the clearest example of that shift. Like unfortunately, most of us, I assume, viewers of the channel, we are not semiconductor engineers. So to really benefit from this AI boom, I agree with some union, what they are saying. I know where they're coming from, that the AI tech giants, the big guys, are making all the money in the AI boom, yet the little guys are not benefiting from the AI boom. So for general citizens like you and me, who is not semiconductor engineers at Samsung, for us to fully benefit from this AI boom is through investing. So that's why we are looking at financial news every single day and breaking down analysis and trying to find the good stuff and which one is gonna stay in this AI boom. All right, so let's shift gears to Hong Kong right now, which is my home city. And right now I have a very good news, especially for those of you who are from Hong Kong as well. So what we have here is that Hong Kong has just overtaken Switzerland as the world's biggest cross-border wealth hub. So this is a massive shift in global finance. So because for decades, if you were rich and really rich, Switzerland was the place, because there's Swiss bank, there are Swiss secrecy or neutrality, and that was the global symbol of wealth protection. But right now, the money map is changing, and the center of gravity is slowly moving east. So what happened is that, according to Boston Consulting Group's the latest 2026 Global Wealth Report, Hong Kong now manages around, so here are the figures, so it manages around $2.95 trillion in offshore wealth. That narrowly puts it ahead of Switzerland, which came in around $2.94 trillion. Yes, that is very close. But symbolically, this is a very big moment because it shows where global capital increasingly wants exposure. So you could ask, why is Hong Kong winning? Like, there are actually a few reasons. So first is China's wealth boom. So over the past decade, China created huge numbers of millionaires or billionaires, and a lot of that money flows through Hong Kong. Second is the IPO. So IPO market in Hong Kong came roaring back last year. It's actually the number one. So reclaimed the top position globally in terms of capital raised. So like big listing, more capital activity, more international money entering Hong Kong again. And third reason is that Hong Kong sits at a very unique position. It acts as a bridge between mainland China and also global markets. And that's why it's incredibly important financially. Now, according to BCG, Hong Kong and Singapore are expected to keep growing very quickly. So around 9% annual growth through 2030. That's much faster than Switzerland, which is expected to grow closer to 6%. Well, the reason why is because like Asia is creating wealthy people faster than Europe. So there is new businesses, there is new tech companies and new capital, and global finance follows the growth. And the bigger story here is like underneath this report, there's a much bigger shift happening. So global capital increasingly wants exposure to Asia, especially China. That's where a huge amount of future economic growth is expected to happen. And Hong Kong is positioned right in the middle of that story. But like, don't worry, like I'm not trying to say that Switzerland is dead. Like, let's be clear about that. Switzerland is still incredibly powerful financially. Like, in fact, global stability is still pushing safe haven money into Swiss banks, especially from regions facing conflict or uncertainty, including parts of Middle East. So this is not Switzerland collapsing. It's just that Asia is rising faster. And I think like this story sets something much bigger than just rankings. Like, we are watching the world's financial system slowly rebalance. For decades, global wealth was heavily centered around the West. So the US, Europe, Switzerland, London, but now capital is increasingly chasing Asian growth, and that changes the global financial map. So Hong Kong overtaking Switzerland is very symbolic. I'm very proud to say so as a Hong Kongese. It shows where the new wealth is being created, where capital wants exposure, and where the financial future might be heading. The competition for global money is no longer just like bank versus bank. It's becoming sort of like East versus West, like two financial systems, two growth engines competing for wealth capital in real time. All right, so speaking of competing for wealth capital, I'm sure a lot of people are looking into Bitcoin, especially from a more traditional mindset, from a more TradFi mindset. So another story we have to talk about is, of course, Cathie Wood. So she's back with another massive Bitcoin prediction. And this time, she says Bitcoin could hit between 750,000 to $1.25 million within the next 5 years. Like, yes, $1 million Bitcoin. That prediction came from ARK Investor CEO, so Cathie Wood, during a recent Fox Business interview. And according to her, the reason is simple, which is institutional adoption. So let's take a look at this clip right now.
1,250,000 over the next 5 years. I got to be honest, has even some Bitcoin bulls thinking it might be too aggressive. So walk us through this.
Sure. Well, the way we get to that number, now that is our bull case. Our base case is closer to 750,000. But the bull case involves a substitution for gold. So as generational wealth transfer takes place, we think that younger people are more prone to adopting a digital store of value. So that would be Bitcoin. The second is Bitcoin is an insurance policy, particularly in emerging markets, against fiscal and monetary neglect at best, or corruption at worst. And so as wealth increases around the world, we think that individuals will shift from stablecoins, and that's been a very interesting development, to Bitcoin, which has much more appreciation potential. But the biggest reason is institutional adoption.
Now, to be fair, Cathie Wood has been one of Bitcoin's biggest supporters for years. Like, long before Wall Street fully embraced Bitcoin, ARK Invest was already buying into the space. Like, they invested heavily in Coinbase, they backed Bitcoin ETFs, and they spent years publishing research arguing that Bitcoin could become digital gold. At the time, like, a lot of people laughed at that ideas, but look at where Bitcoin it is right now. Like, the biggest financial institutions in the world are building products around Bitcoin. So Wall Street has changed, and that is the key shift right now. Like, the same institutions that call Bitcoin a scam, they are now launching Bitcoin ETFs, custody services, treasury products, and long-term Bitcoin allocation models. And that is a huge change from just a few years ago. And Cathie Wood says the institutional demand is still only beginning. And what's more interesting is that, like, these giant Bitcoin price targets are no longer coming from crypto people. They are coming from TradFi people as well. So last year, remember, like, BlackRock CEOs are being Larry Fink. Larry Fink said Bitcoin could potentially reach $700,000 if sovereign wealth funds and large institutions allocate just 2% or maybe 5% of portfolio into Bitcoin. And again, like, this is coming from Larry Fink. It's not like some nobody sitting at home doing some analysis like this. Like, this is the CEO of BlackRock, the world's largest asset manager. That alone shows how much the conversation has changed. And it doesn't just stop there. It's not just Larry Fink. Standard Chartered still sees Bitcoin reaching around 500K by 2030. VanEck has an even more aggressive long-term model, projecting Bitcoin near $3 million by 2050. Now, obviously, these are just predictions, not guarantees. Bitcoin's still very volatile, and nobody knows exactly where price goes next. But the direction of institutional interest is becoming harder to ignore. Like, think about it, like, for a second. If Bitcoin really does become a $1 million asset one day, people might look back at today's roughly like $73,000 a piece, the same way people look at when Bitcoin was sitting at $1,000 a coin. So that's the mindset many long-term Bitcoin holders have. Not that Bitcoin is cheap compared to the past, but it might still be early compared to where they think the network eventually goes. And Bitcoiners think this way because Bitcoin is different from traditional money. There will only and only ever be 21 million Bitcoin ever existed. That supply cannot be expanded. No central bank can print more, no government can dilute it, and as more institutions enter, the available supply becomes tighter. And that's why Bitcoiners talk so much about scarcity. Now, personally, like, whether Bitcoin hit $1 million or not, I think the biggest story is this: like, Wall Street no longer see Bitcoin as a joke. The conversation has changed from should Bitcoin even exist to how much Bitcoin should institutions own. That is a completely different world from just a few years ago. And for viewers at home, like, that might be the most important takeaway, because many people still think they are late. But long-term Bitcoin holders often believe we are still very early in the adoption cycle, especially if sovereign wealth funds, pension funds, and global institutions continue entering the space. So for Cathie Wood, Her prediction might sound really crazy today, but honestly, like so did the $100 Bitcoin once, so did the $1,000 Bitcoin, so did the spot Bitcoin ETF. And now all of those things are reality today. For anyone like slowly stacking the Satoshi and thinking long term, the bet is simple. Like that scarce digital money becomes more valuable in a world where fiat money keeps expanding. And that might be the real story behind all these massive Bitcoin predictions. So despite Bitcoin has dropped quite a lot after the pump. So we pumped to like 82 or 83K. People were very happy, but right now we're sitting at 73K. Honestly, in the short term wise, that means in the next a month or two, I don't see us getting out of this bear market anytime soon. I get these questions a lot, like where are the indicators that we could possibly look at just to predict, okay, Jeremy, we're finally out of the wood yet. We are almost an up-only territory. We are officially entering the bull run. So there are 3 indicators we can look at. So we for this, like we need to use a more long-term mentality. So that's why I'm using the weekly candle today. So like for weekly, so first indicator is the Gaussian channel. So if we zoom out to any of the previous cycles, so there are some red colors here, some red color again and again. So basically this marked the bear cycle, so the bear market that we had. And obviously, according to Gaussian channel, we are well, maybe entering the second stage of the bear market. So in other words speaking, there's still some consolidation and maybe another leg down in this bear market. Maybe we haven't bottomed out yet. So this is one. So since we are still in this red color, one indicator, maybe early sign that we could tell, okay, we are officially out of the wood already. So Jeremy, like first one is that we need to see the Gaussian channel, basically Bitcoin weekly candle inside this Gaussian channel, or have like a 1 or 2, actually 2 or 3 weekly candle closing inside this Gaussian channel. Then this is sign number 1 that, okay, maybe things are getting better from now. And then this is first. And the second one we have to look at is actually the Ichimoku cloud. So the Ichimoku cloud is a very, very good indicator. So there are so many lines here, it's very confusing, but bear with me. I just want you to focus on the red line here. So red line being the baseline of the Ichimoku cloud. And this is a really good indicator. So if we have like if we zoom very, very close to what just happened a few weeks ago, as you can see, the red line is over here. And if we have like 2 or 3 weekly candles closed above this red line, which is the baseline of the Ichimoku cloud, we could say, okay, we have another confirmation that the bear market is over and things are going to go better. We go to the la la land from where it is. But like unfortunately, like despite we had that really nice bomb, so people were so crazy about the bomb. So like from late the end of February, and then we pump all the way to $83,000. Yet, like, look at this weekly candle, we got rejected. We didn't manage to close above the baseline. So this is weakness number 2, and vice versa. Like you could always flip this mindset. So if where we have like 2 weekly candles closing above this baseline, then I'm going to switch my narrative to bullish, but looks like we're still too early to call that we are entering the end of bear market. So signal number 2. Signal number 3 is that if we go ahead and close the Ichimoku cloud and bring out the EMA, so 50 EMA, so 50-week moving average. So what we could see is that like if we have again 2 consecutive weekly candles closing above the 50-week moving average, then we know that we are out of the wood. but it's like we could always flip that. It's almost like a coin. The reason why I managed to call that early, like it's officially entering a bear market, because the same happened like back in November, so mid-November. That was the first time we closed below the 50-week moving average. And then ever since that, we are below. So there was one occasion that was January 2026 this year. We tried to touch the 50-week and then we got rejected. So again, this shows weakness. So point being, I just introduced 3 indicators, and none of the indicators signal that we are entering any bullishness coming soon in the next month or 2. So that's why I'm just waiting around, just chilling. Sometimes if I see some profitable trade, like short-term trade, I'll do it. But like trading is more dangerous. Like yeah, if you want to get some good sleep at night, like investing long-term makes more sense, because long-term wise, you know my stance. I'm still a long-term Bitcoin bull. So DCA looks like the ultimate and easiest strategy for most of us. All right, so we'll take a short break from now, and when we come back, we have to talk about some big institutions or big banks entering into the crypto space or Bitcoin space. So this time we have MasterCard, and also we have an Italian bank entering stablecoins, and also crypto. So if you want more information, make sure to stay with us after the break.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
All right, guys, welcome back to Roxum TV, and thanks for sticking around with us after the break. We now have to talk about MasterCard because they just made another huge step towards crypto. So the global payment giant has officially secured a New York bit license, one of the toughest crypto regulatory approvals in the entire United States. And this is important because it shows something bigger happening behind the scenes. So TradFi is no longer trying to ignore blockchain payments. They are now trying to build on top of them. So MasterCard announced that the US division officially received approval from the New York State Department of Financial Services, also known as NYDFS. That approval gives MasterCard permission to conduct certain digital asset activities under New York's crypto rules. Now, just to give you guys a little bit of context, so a bit license is not easy to get. New York created this framework back in 2015, and it requires companies to meet strict standards around cybersecurity, around consumer protection, capital reserves, and anti-money laundering controls. a lot of crypto companies have actually complained for years that the process is too expensive and it's too difficult. So when a company gets approved, markets pay attention. And MasterCard has wanted this for a long time. Like, it's not just about speculation on Bitcoin, it's about payment infrastructure. MasterCard says the license will help support its push into stablecoins, into tokenized deposit and blockchain-based settlement systems. So in simple terms, they want to build payment systems using blockchain rails, and stablecoins matter because honestly, stablecoins are becoming one of the biggest real-world crypto use cases right now because they solve a very simple problem, which is like moving money globally is still very slow and expensive. Traditional banking transfer can take days, especially cross borders. But stablecoin, they can move 24 hours a day and 7 days a week almost instantly. That's extremely attractive for businesses and financial institutions. We know that. And Wall Street is moving fast. MasterCard is not alone. Over the past 2 years, major banks and payment firms have already been racing deeper into blockchain infrastructure. Earlier this year, we have like MasterCard even agreed to buy stablecoin payments company, so BVNK, for $1.8 billion. That is a major signal because it shows stablecoins are moving from crypto niche into mainstream financial infrastructure. And what's important here is that companies like MasterCard are not trying to replace the banking system. What they're trying to do is to upgrade it. Like, that's the key difference. For years, crypto talked about replacing banks entirely, but now many of the biggest financial players are building systems where traditional finance and blockchain networks work together side by side. And honestly, this might be one of the clearest signs yet that blockchain technology is becoming normalized inside TradFi, because MasterCard don't make moves like this for hype. They process trillions of dollars globally. And if they think like they are investing heavily into stable infrastructure, that means they believe blockchain payments are becoming part of the future financial system as well. But this also changes crypto because think about it, like this creates a split inside crypto itself, because Bitcoin was originally built to remove the middleman. So no banks, no payment companies, no gatekeepers, but like we're seeing the trend right now. So TradFi giants adapting blockchain technology into regulated systems that they can control. So the future might not be crypto replacing banks. It might actually be like banks absorbing crypto infrastructure into the existing system. So ultimately, that's one thing we have to deal with. But final take here, MasterCard getting a New York bit license. It sounds very technical, but the message is simple. TradFi is moving deeper into blockchain. Stablecoins are the mainstream, and global payment networks are preparing for a world where money moves on-chain alongside the traditional banking system. And the companies that once ignore crypto, they are racing to build the infrastructure around. And it doesn't just stop there. Another story we have to cover is we now have a European bank, and they are quietly moving into Bitcoin as well. And now Italy just crossed another major line. So because like one of the country's major banks has officially received approval to offer Bitcoin custody services under Europe's new crypto rules. That sounds very technical, but bear with me, this is actually a very important shift. Like, because for years, most banks treated Bitcoin like a threat. But right now, many are starting to treat it like some real business opportunity. So the bank I'm talking about is Bank Castella, and being a bank in Italy, a banking group managing around 34 billion euros. And they have officially become the first bank in Italy cleared to offer Bitcoin and crypto custody services under Europe's MiCA framework. So MiCA, of course, stands for Markets in Crypto Assets Regulation. It's the EU's big new crypto rulebook designed to bring digital assets into the regulated financial system. The approval came from the Bank of Italy after Banca Seller completed the required registration and notification process. The bank said it plans to launch crypto custody and transfer services later this year. So for viewers out there, crypto custody, basically it means securely storing digital assets for clients. So almost think of it like a bank vault. So but for Bitcoin, instead of like gold bars or cash, a lot of institutions, they want Bitcoin exposure, but they do not want the responsibility of managing private keys themselves. So banks now see that as an opportunity. If clients want Bitcoin, banks want to become the trusted middleman holding it. And Italy is not alone. Like across Europe, more and more banks are moving into crypto services. So, for example, Germany, Deutsche Bank has expanded crypto and tokenization projects. In Spain, BBVA has pushed deeper into digital assets. The entire European banking system is slowly adapting to the reality that Bitcoin is not disappearing. And even central banks are paying attention these days. So that might be more surprising, like they are openly discussing Bitcoin positively. One example is the governor of the Czech National Bank. He has become one of the most pro-Bitcoin central bankers in the world. He previously suggested that the Czech Republic could allocate up to 5% of national reserves into Bitcoin. That is a huge statement coming from a central bank governor. He argued that even a small Bitcoin allocation could improve long-term returns without dramatically increasing portfolio risk. And the Czech National Bank has already launched a small test portfolio with Bitcoin exposure, and that would have sounded completely crazy just a few years ago. So what we're watching here is Bitcoin moving from the outside of the financial system to at the center of it. First, it was retail investors, then we have hedge funds that come to ETF, and then now commercial banks and even some central bankers. But at the same time, there's still a philosophical divide inside Bitcoin, because Bitcoin was originally created to remove the need for trusted intermediaries. The idea was to hold your money, not your key, not your Bitcoin, no bank needed, no middleman needed. But now traditional banks want to become the custodians of Bitcoin. So the question becomes like, is Bitcoin integrating into the banking system or the banking system integrating into Bitcoin? The debate is very much still ongoing, but one thing for clear is that like Europe's bank increasingly understand that Bitcoin is not going away. And instead of fighting crypto, many are now raising to become the infrastructure layer around it. So whether it's custody or tokenization or stablecoins or digital asset services, the banks that once mocked Bitcoin are now trying to build business around it. And that might be one of the strongest signs yet that Bitcoin has already become part of the global financial system. So yeah, good and bad. There's always trade-off for certain things. Like as Bitcoin get more popular, we know institutions will be interested as well. So yeah, I guess what we could do is to deal with it. All right, so like that's pretty much all I want to cover in today's show. So before you go, make sure to give us a follow on X. So my X is champion_crypto_IO. Make sure to follow Roxham TV as well, because we have regular news coming out on a regular basis, hourly basis, and there are so many prominent guests joining our interview. So point being, there is so much valuable content you probably do not want to miss out. So make sure to give us a follow. And as always, I'm live here Monday through Friday, starting at 3 a.m. Eastern time. So if you don't manage to catch my shows live, don't worry, the recorded versions are also available on both channels. So being Jam Crypto YouTube channel and also Roxham TV YouTube channel. So thank you guys for watching. I'll see you guys in the studio soon when I get better. And yeah, see you guys in tomorrow's show.